I'm in my 40s. And once I understood how much I needed to retire, the next question was obvious. How should I actually invest? Not in theory, but in a way I could stick with for the next 20 years. Because most portfolios don't fail because they're wrong. They fail because they're too complicated. So I looked for something simple. And I found what's called a three-fund portfolio. This approach became popular through Jack Bogle, the founder of Vanguard, and the Bogleheads investing community. The idea is simple. Own the entire market, keep costs low, and stay invested for the long term. The portfolio uses just three types of funds. First, a broad stock market fund. For example, funds that track the S&P 500 or total market funds like VTIA or IWDA. These represent large companies across the economy. Over the long term, they've returned around 8 to 10% per year. And over the past decade, returns have been around 10% annually, although that was a particularly strong period for markets. Second, an international stock fund. This gives you exposure to markets outside your home country. Because growth doesn't happen in just one place. Over time, international markets have returned around 6 to 8% per year. And third, a bond fund. Examples include total bond funds like BND or AGG. These don't grow as fast, but they help stabilize your portfolio when markets fall. Bond returns are usually around 2 to 4% per year. So together, you get growth, diversification, and stability. A balanced portfolio like this has historically returned around 7 to 8% per year over the long term. These are long-term averages, not guarantees. And that's why this approach has become so popular. It's simple. It's low cost. And has worked across many different market conditions over time, even though it still goes through short-term drops. Now the key question is, how much do you put in each? If you're in your 40s, you still need growth. But you also need some protection. A simple starting point could be this. Around 75% in stocks, split between local and international markets. And around 25% in bonds. This gives you enough growth to build wealth, but enough stability to stay invested during downturns. Because that's the real goal. Not the perfect portfolio, but one you won't abandon when markets fall. I keep my approach simple. I invest regularly. I stay diversified. And I rebalance occasionally. No chasing trends. No reacting to headlines. Just a structure I can stick to. Because in your 40s, you don't need complexity. You need clarity. And a plan you can follow consistently for the next 20 years. Like and subscribe if this helped simplify things. This video is for educational purposes only. It is not financial advice. If you'd like to see more simple investing ideas like this, subscribe to the channel.